GM, everybody, Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading and a little bit of insights as to how I'm approaching this market. So without further ado, let's get started. We have the S&P SPY pulled up here on a daily time frame, and we are in an 18-day uptrend. It has been the best uptrend of the year. It's the fourth uptrend of the year, and it is continuing to pay in this uptrend. So just to recap, we had rules to get long above this 393.16. I said if we get above here, it's a very high odds trade for a strong uptrend. So when we get long here, stop at this pivot low. You can ride this up. You stayed riding this. You can move your stop to the July 26th low, and we got this. And then we had a bull flag as we came into this resistance area. If you guys watched last week's video, I'd mentioned, hey, this area of resistance, be cautious, but if we get above that resistance area, the June 2nd high, once again, we are likely going to make a run to the 50% fib, which was this 421 level. So this 421 is a 50% fib retracement from the all-time high to this previous low, which is a very, very important level. You can see on Thursday we gapped above it and closed below, which I had mentioned it's tough to add and press long after being in 16, 17 days of uptrend. If you didn't get long back here or in here, very tough to continue to press and add long if you weren't already long. So on Friday, again, gapped above the 50% fib and then closed extremely strong. So I like to see this price action. But again, it's really difficult to continue to add after a prolonged uptrend, right? If you didn't get long in here, it's tough to get long up here after a month of riding this uptrend. So what do we do now? Well, it's very simple. For me, I've raised my stop to this pivot low, which was the August 9th low. So above this, below this level, obviously we're going to be back below this band of resistance, and obviously we'll be breaking trend as this is inside of the cloud, so we'll no longer be an uptrend. And as you guys always know, whenever we break trend and no trends and downtrends, the priority becomes preservation of capital and protecting the money that you have for the next uptrend. So you have capital to ride this and stay long versus your stop. So currently, I'm simply staying long with this as my stop, and it's an easy trade. I have defined risk. It's going to keep me out of trouble because my cost basis is above this. As you guys know, I was on my wedding and on my honeymoon, and so I was away from the markets. And again, I appreciate everybody's well wishes and your patience with me. So my cost basis wasn't back here where I would have liked it to be, or right around this 393 area. Regardless, this is still going to keep me out of trouble. So for me, there's my stop. If you guys want to be a little more defensive, I would say back below this 50% fib, it could be used as a stop as well. So maybe you use this gap high as your stop. So back below the 50% fib, roughly 417, 418 level. If you don't want to use the 420, 421 level, give yourself a little bit more cushion. But for me, you guys know I like to ride the uptrends. So that's how I'm playing this market. Now we're coming into major resistance. So the 200-day moving average is just above, currently sitting around 431, 432 area on the SPY. And if we take a look at the NASDAQ, a little bit more further deviate from it, still have some more room to the upside. So this week, we're going to have fewer setups, and we're going to be staying long with our stops. So very simple trading week. Simply stay long with stops. We're going to have some trades from the trading playbook, obviously on the long side since we are in a prolonged uptrend. And look, it's very easy to have an opinion in this market. And I think long term, maybe the bears are right. Maybe inflation is too much, and The geopolitical risks around the world will be weighing in. But as long as we're in this uptrend, it doesn't matter. We trade price, and if price is above the 10 SMA, above the 50 SMA, and we have rules to trade long in uptrend, that's what we do. We get long in uptrends with defined risk and stops. So that's how I'm playing this. Very simple trade. Don't overthink things. All right. So if we do a full retracement, let me just pull up some fibs so you guys can see what I'm talking about. Move this a little bit. So if we do a full retracement, that 618 is a very important level. Above that 618, I think it's very likely we see that 786 fib retracement. So there's still meat left on the bone, but like I said, we're coming into some major resistance. The 200-day, which is right around this area, with the 618 fib retracement. So this area from 432 to 435, we'll call it, is going to be major resistance. And I expect the bears to be lining up at this area to try to short the market again. So it would be logical, right? I'm not going to pick a top. I'm going to ride this uptrend until the trend ends. But it would be logical to expect some sort of selling in this area where maybe we could come back, let this 10 SMA catch up again, and maybe we make another run at it. Okay, so be conscientious. We're very close to overhead resistance. So like I said, it's tough to continue to press and add long after an entire month of uptrend. But at the same token, you don't want to pick a top because this can continue to grind and move higher, and you don't want to miss out on that move. So that's why I simply say stay long versus your stop. My stop currently is this 410 area on SPY. We break below that. Number one, it's going to keep me out of trouble. It'll still be a profit. I've been able to scale. And on top of that, it's still a positive trade. And I don't have to worry about downside risk because I know I have my stop in place. And either way, this uptrend has paid us. So that's how I'm playing this market. And that's how I'm going to be playing the rest of this week. So not going to be overthinking things too much. Simply staying long with defined risk. So let's take a quick look at some crypto. Bitcoin, it's grindy. I don't really love this price action. It doesn't seem like we have a ton of momentum. But regardless, we're above a rising 10 and now a rising 50-day moving average. So you have to respect the trend. So Bitcoin isn't performing as well as Ethereum. Now Ethereum, on the other hand, is extremely strong. Okay, so from these lows, we had the lows back at around 880, right? And now we're almost back to 2000. So it's doubled since June, July even. So since July, we've doubled if you were able to take this trade. Now I had a little joke on Twitter with one of my Twitter friends about hey, above this 1268 area, 1270 area, yeah, I would be getting long because it's, you guys know our methodology, price strength confirmation, and above that, I thought it was a very high odds trade that, hey, we're in uptrend, I'm gonna ride the trend, put my stop at the previous pivot low, and see what happens. And this has been a phenomenal trade. So up here again, we are encroaching on some resistance. The 200-day is flattening out, which is good. So yeah, who knows what happens with Ethereum? We are in an uptrend and things look pretty solid. So difficult to try to pick a top or short Ethereum because like I said, we're in an uptrend and we ride the trend until it ends. So if you're thinking about Bitcoin or Ethereum, Ethereum is showing relative strength. So I like Ethereum over Bitcoin at this point. So keep that in mind. Lastly, we'll take a look at bonds. So bonds, yeah, we got to keep a close eye on this. On Thursday, nasty candle closed below the 50-day. And then on Friday, still an inside day. You can see an inside day from the Thursday, but we did close back above that 50-day moving average. So keep a close eye on this. If we break Thursday's low on TLT, on the bonds, 20-year. Keep a close eye out for tech and the growth names, because if this starts to sink lower, it's going to be difficult for tech to continue the momentum to the upside. So we got to keep a close eye on bonds. But like I said, I'm riding this trend until it ends. This Friday was a very strong candle. I'd love to see this move above the 50-day, I'm sorry, excuse me, the 50% fib retracement right around that 421 area. And, we got to stay long with stops. Okay, so don't pick a top. Ride this trend. We are deviated from the 10 SMA. The 10 SMA currently is sitting around, 415. That's a pretty big gap to 428. Okay, so expect some sort of resistance if we get up to this 200-day, which coincides nicely with the 0.618 fib retracement. If we get here, expect the bears to be lining up with sell orders and trying to push this market back down. We're still below a 200-day moving average. We really need to get back above and bull flag above this 200-day in order for me to feel really confident. I'd like to see prices bull flag in here, similar to like what we did here before a move higher. If we get above this 200-day, I would like to see a bull flag and consolidation before another move higher. But like I said, simple week this week, simply staying long with stops. And yeah, we'll see you guys on the open. Take care.